Good morning, good afternoon, good evening. Welcome to the Talent Market 30. In less than 30 minutes, I'm going to run you through the highlights of the labor market of the last 60 days. And as per usual, please, if you have any questions, there should be time left to address some questions. Pop them in the chat box and I'll address them at the end. Today, we have a couple of things to address. First of all, we're going to look at what is happening in the labor market, what is the temperature of the labor market right now. Then we're going to go into a contextualizer to understand what's happening after the election of Donald Trump. What can we expect from his presidency when it comes to the labor market? We're also going to go into our global in-demand skills research. There are a couple of takeaways that we found that I think are very interesting to follow. And also, you have the ability to dive into that a little bit further yourself. We're also going to go and look into what are the wage growth outlook for the next 2 years to start planning and understand if you're in line with the market as well. And last topic of the day is going to be the AI adoption on the desk workers. There have been an interesting survey done by Slack that I want to highlight a little bit further. And of course, there are going to be some key takeaways and a Q&A at the end. So if you have any questions, like I said, please pop them in the chat box. First of all, the labor market. So like I said last time, we see stabilization in the labor markets globally. In the US, we see that power dial has gone up again. So the power has shifted a little bit further to the employee from the employer. And that's mostly due to a broad range of indicators pointing in that direction. First of all, vacancies are up month on month. They're up quarter on quarter. They're not up year on year yet, but they're basically almost flat in year on year comparison for the open roles in the US right now. And interesting to note there is that in the last year, we've seen more job growth, especially in federal government jobs and that kind of things. That is actually down year on year now. And the biggest growth is actually coming from the business and professional services industry. So all in all, I think quite a healthy sign and definitely an indication on that we might have seen that dip in the U.S. market, and maybe 12 months from now we'll look back and we'll see that September was the bottom, and that we're from now on are continuing. There's one caveat there. Of course, there was some hurricanes over the last couple of months, and that might have put up the numbers a little bit higher over November. But in general, I think a healthy labor market, also if you're not just looking at demand side, but also wage growth is healthy. The open rate is still very, very high, historically high, so that the open rate, how many jobs are actually open on the total amount of jobs. So a couple of indicators are really looking in the green again in the US. In the UK, that's still a different story. There we see the major indicators still going down a little bit. So that dial has shifted a little bit further towards the employers. We see real wage growth slowing down there a little bit as well. And in the Netherlands, it's mostly flat. Vacancies are not necessarily growing at the moment. And wage growth is ticking down a tiny little bit, but in general, relatively flat if you look at the power between employers and employees. A couple of other markets that I wanted to call out that we see quite some resilience, especially in Ireland and Australia, where we really see the job markets coming back again. So in a way, that's good to see. But of course, as an employer, that might be difficult that this is the first signs of the job market actually getting tighter again. Then moving on to the Trump presidency. So in general, there are some economic items that will have an impact from a Trump presidency. You might have seen in the news that in general, Trump's election has been well received by the global financial markets. The S&P 500 is up. The dollar has gotten stronger. That's all based on the expectations that he will provide tax cuts and deregulation. We've seen that he is going to work with Elon Musk to further work on deregulation, but also the capital gains tax is expected to decline or to be cut, and therefore companies, of course, will have more money to spend, which could have an impact on more job growth and an increase in demand for talent. But there's potentially also another side to this, right? Because if taxes are being cut and the deficit not being seen as an issue, spending could further increase, and that could lead to a significant increase in the deficit. And of course, that will lead to higher interest rates, and in turn, that could dampen the economy further. So it remains to be seen what's really going to happen. Also, that is the same story around immigration policies. Of course, Trump is expected to limit immigration and potentially also deport a large amount of people that are currently working. And of course, that could be difficult for the labor shortages that are already quite persistent in the US. Also, the main thing that's currently above the market is potential tariffs. And tariffs will have an impact on overall economic growth globally. It will also relate to how the allocation of work will happen, especially on manufacturing. We've seen strong growth in manufacturing in the US already over the last few years. But that, of course, the impacts could be quite significant. It still remains to be seen. Currently, the betting markets have a 37% chance that Trump will introduce large amounts of tariffs in the first 60 days of his presidency. But that also means that it is not 100% sure yet, of course, that it's for sure going to happen. So that will be very interesting to watch because they're going to have a profound impact. And it is already having a profound impact right now. A lot of companies are expected to front load a lot of their orders to prevent being subject to some of those tariffs coming. So you can imagine if you're going to buy it anyway, you might as well buy it now because in a couple of months you could potentially pay 10, 20, or maybe 30% extra on what you want to order. So that is expected that will lead to an increase in trade in the short term, at least. And of course, that could have an economic result that the higher economic growth and of course, therefore, more demand for talent in the near term. Then moving on to Trump's pick for Labor Secretary, that's Lori Chavez de Remer. She used to be a mayor of Happy Valley in Oregon. She has also been member of the House of Representatives. She lost her seat in the last elections, but she is not the pick that most conservatives had expected. She's seen as pro-union, which of course for the Republicans is not their usual way of working. But in general, it's expected that she will have a relatively balanced approach to the labor markets. She has co-sponsored in the past an act that supports the protection of unions. So she's seen as relatively pro-union. Teamsters is one of the largest unions in the U.S. Has also supported her nomination. But some pro-business people in the Republican Party are not too happy with it, even though her nomination is expected to pass relatively easy in the Senate. Also, what is expected is that she's going to have a focus on worker classification. The Biden administration has already worked on this in the last 4 years to make clear on what is an employee, what is a gig worker, and she's expected to continue that and will find a balance between what are real gig workers and what is actually an employee, and hopefully create more clarity around that So for businesses to understand when they can use which type of contract with their workers. So in general, this is a balanced outcome from what we can expected. We've seen different picks, but this is actually a pick from Trump that is also supported by quite some Democrats. So for the Labor Secretary, we do expect a balanced approach going forward. Moving on to the next topic, in the last few months, we've worked quite hard on our Global In-Demand Skills report. This is an annual research that we do to look into all those skills that most enterprise companies are recruiting for and will remain to be recruiting for in the future as well. And I wanted to take you through a couple of main things that we've seen coming out of that. We have basically the findings of our report split in two ways. One is an executive summary where you can find all the things that we've learned by looking at millions of job postings and millions of profiles that we analyze to understand what's happening in this area. But also we have an interactive dashboard on our website that you can use for free and that you can find out which jobs or which skills are specifically in demand, how hard is it to recruit for them, what kind of compensation is in line between different countries, that you can see how you can potentially leverage wage arbitrage and understand on what is the best location to hire, but also how difficult is it then to hire. But what I wanted to do today is to walk you through some of those main findings that we've seen in our Global In-Demand Skills research. So first of all, we see across the board that the demand has gone down in most areas, but not everywhere. And there are two exceptions that I think are very important to be aware of. First of all, we see that in relatively low-cost countries that the demand is up. It definitely looks like companies are aware of their location strategies and really want to use labor arbitrage to make sure that they find those cost savings. And the countries that stick out of there are India and Malaysia, but also Mexico. Another area where we've seen that demand has increased is in the engineering and maintenance skills. There we see that the demand has gone up further and it's actually getting trickier and trickier to hire for those skills. What I personally found the most interesting takeaway is that we see that talent is actually faster in adopting AI skills and adding that to their social profiles than companies are. Right now, about 5% of the in-demand skills demand that we looked for is requiring some AI skills or at least mentions AI skills. But we see that talent is actually faster in adopting those skills and adds the skills to their profiles at a faster rate than companies actually are requiring it. And also another interesting thing that we see is that among the AI talent, we see a higher mobility. In general, mobility has been down year on year a little bit, but the talent that adds AI skills to their toolkit basically is moving at a higher rate than the average talent. And one or two last items that we thought was very interesting is that we see that for the senior AI talent, it has gotten more difficult. And that's maybe not a surprise, but in general, AI talent was down a little bit year on year. But if you're looking for specific core AI infrastructure skills, such as natural language processing, then you see that especially for senior talent, that has gotten more difficult year on year to hire. And last but not least, one of the areas that we see basically every year is that the global in-demand skills are dominated by more men than women. So we see a much higher representation of men in talent pools that are in demand than women. And that's why we've also added this year a specific filter that you can use on our dashboards that you can look for how hard is it to recruit female talent in these skills that basically every company is looking for. So we would recommend everybody to go to our website. You fill in a small registration form and you have immediate free access to the tool, and you can browse at your own leisure through all the dashboards that we have there to understand the labor market around the in-demand skills a little bit more. And if you have any further questions on that, please feel free to reach out as well. Next up, at the end of the year, every company has been finalizing their budgets, and I thought it would be interesting to look a little bit on what will inflation, but maybe more interesting, wage growth, so that wage inflation happen over the next couple of years. And of course, a lot of central banks are looking at that as well. And here's an overview of developing countries and what is expected to happen to their wage growth and also inflation. And a couple of takeaways in that area. So first of all, after a relatively rocky ride in the last few years where we saw inflation coming up quite quickly, and then of course, wages responding to that, depending on how flexible the labor market is following that as well. In the US, you see a very quick trend of quick responses to one to the other. You see in Europe with a little bit less flexible labor markets that it takes a little bit longer to respond, that there's first moderation in wage growth, but right now, for example, in the Netherlands, wage growth is still relatively high. But in the next 2 years, that is expected to stabilize a little bit more, where you see inflation going back to most of the targeted 2%, and wage growth being near to that. Of course, everybody wants their wage growth to be higher than inflation so that your real wages grow. But you see that there's a bigger normalization ahead and they're more stabilizing. There are, again, of course, some differences. We see in the EU or Eastern European countries, you see that there are some differences, but there you see that inflation stays a little bit higher. If you look, for example, at Poland, you can see that wages are still expected to grow with almost 7.5% in 2025. Moving on to the next topic and next and last topic, which is a survey that Slack did among 17,000 desk workers. And there are a couple of things that I thought was very interesting coming out of this survey. First of all, almost all 99% of executives that they surveyed are expected to further invest in AI in the coming year. But that stat is especially interesting if you combine it with another stat, and it is that 48% of the people indicated that they are not comfortable in sharing with their manager that they have used AI. And I thought that was a fascinating stat. So on one hand, you have executives promoting and investing in AI and understanding the need for it. You also have workers really wanting to adopt. You see that 76% of workers want to become an AI expert, but at the same time, they feel a stigma on using AI. Now, why is that? There are three top reasons for that. They feel like AI is cheating, if they feel they're going to be judged by their managers if they use AI. They're also fearing that they're being seen as less competent when they use AI, and they also fear to be seen as lazy. And I thought this was a very interesting survey because it highlights, I think, where a lot of companies are right now when it comes to AI. First of all companies support it, all companies are working on it. Most companies have had successes introducing AI in at least some fields, but you see that the adoption at scale is a very tricky process. It's a true change management process. And in this survey, but also in other surveys, you've seen that the lack of training is really hindering it. And that also gives unclarity on what workers are actually allowed to do with AI and what they are not. A lot of them are indicating that they are unsure about when they can use it and how they can use it. And I think there's a clear role for HR here that they can go in and understand what are these reasons that people are not using AI, and how can we make sure that you implement AI in a safe and comfortable way for your workers as well. Because I think nobody doubts anymore that it's going to have a profound impact, but you do need to make sure that people know how to use it, and it's encouraged to use it in the right ways. The people that made this report also made a prediction that I think they're going to be right in, is that also our talent is going to be working for companies that are AI savvy. So are your AI practices in your company actually in line with what talent expects? Because I think if you don't have a good AI policy that really enables the fun of using AI in your work, then a lot of talent might actually see that as a reason not to apply or not to stay with your company if they feel that they're not going to have the right access to that. So in general, I think a very interesting study. I can recommend the read. It's not a very long read, and it's a good summarization, I think, of where we are right now in the implementation of AI. So that was all the elements that I wanted to touch upon. A quick recap and a couple of takeaways. So first of all, Trump has been elected, and that will have an impact, especially those tariffs that will come in potentially relatively soon, will initially in the short run create more demand in the market. But the question is, what is going to be the long-term impact of potential tariffs? The new labor secretary under Trump is going to address the worker classification and hopefully create more clarity around that. I would recommend everybody to use our Global In-Demand Skills dashboard, browse around for it. As said, it's free. And last but not least, I think the adult conversation needs to be had in every company on how to use AI and how to leverage that in the right way. And you want to make sure that the intent and the drive that the employees have, that is actually used in the right way, and that you allow everybody to adopt AI, because I think it's a huge enabler for every desk worker at least. So if you have any questions, please pop them in the chat. I think there's a couple of questions that have come in. Let me have a look. Do you think the Trump administration potential tariff policy could have a substantial impact on the European labor market as well? Yes, absolutely. So I think the whole reason actually why I think this is so important is because it might have an impact on any market globally. There is a very good chance that Trump will also put tariffs on European products. And of course, if you just imagine what it could do, for example, in the past, he has threatened to put tariffs on the automotive industry. And you can imagine with already a struggling automotive industry in Germany, that could really hamper Germany's recovery. So that can have a profound impact. There also talks about the 25% tariff that Trump has threatened to impose on Canada and in Mexico, and that is going to have also a strong impact on the Canadian and Mexican economy. Another question: the wage catch-up dynamics in Eastern Europe, will this potentially mean the region might lose its competitiveness to Asia or Middle Eastern countries, or will the onshoring trend be stronger in this case? Yeah, interesting question. If we look at the last, let's say, 10 years, we've seen that the jobs that are being offshored or onshored to Eastern European countries have changed quite a bit. It started off as very transactional administrative jobs, and we've seen in the last 10 years that has really moved into more difficult, higher skilled jobs. So I think the Eastern European countries have really created a good talent base in that area. So yes, of course, wage arbitrage was important, but I think the opportunity of having strong labor markets there with a good amount of senior skills, it will help Eastern European countries, but the reasons to go there around wage arbitrage will a little bit less. What we have not taken into account, though, is foreign exchange rates changes. And you can imagine if inflation is relatively high, that could weaken the currency. So if you think about the Polish zloty, that could have an impact and that could actually offset the wage growth. Far-reaching question, but do we see any potential on the horizon for 2025 that we could look out for as employers that is new, that can have a big impact, or is it AI and all the way for the time being? I think the AI will dominate. I think what has been a little bit slow adoption in the last 2 years, potentially, you see now that major providers of AI with Google, with Microsoft, with the OpenAI, and some other players, that it's really becoming part of the tech stack and is fully integrated. And over the 2025 will be the launch of agentic AI. Google has launched that now as well. And so building your own AI applications, I think that's going to be a major topic for next year. But still, around 40% of the people are currently using AI in their job. That's relatively low. So I do expect that adoption will go up further and will be a big topic to discuss, because you know those rules that the first, you always have the early adopters and the people that follow on. But to reach everybody, that will take some time and will actually ask for more effort from HR to help people along, because you can imagine 5 years from now, if you're not fully incorporated AI in your work, that might actually hamper your competitiveness as an individual talent as well. I see one last question. There's a lot of data. It looks great, but I need to help with understanding it, how it affects my organization. Can I reach out to you or your team? Yes, on the website, you can also see there's a button to reach out to us. If you have any questions on how to use it, please feel free to contact us. And I think that's it for all the questions. So thank you very much for being here with me today. I hope you found it very useful. If you have any comments, I'm always interested to hear, or any topics that you would like to discuss on the next version, please do let me know. There are a couple of elements to look out for next year, early next year. First of all, Randstad's Work Monitor. That's a very large survey that we do annually. It comes out during the World Economic Forum on the 21st of January. And also a highlight of our year is the publication of our Challenge Trends report, which will come out in February. So we'll go into that a little bit deeper on the next session. And of course, any topic that relates to the labor market that you need to be aware of. Thank you very much and have a good day, and I hope to see you all in the new year.